Hey, and welcome to today's video. We're going to talk about the reasons why you should not invest in any circumstances. And these are not just the reason that I want you not to invest, also the reasons that I look at myself and the reason why I probably did not invest from a very, very young age, because nobody explained these reasons to me. Hi, my name is Stefan, and in this channel we talk all about investing, and we also give you all the information to start investing or even maybe to become a much better investor than what you are right now. First of all, I want to say thank you for watching this video, and we are on a journey to reach 10,000 subscribers before the end of this year. So jump on the journey and let's get there. These reasons, I only talk about 3 reasons why you should not invest in the stock market or in any market for that matter. The first reason that I would definitely highly put it as my first reason, and that is do not invest if you don't like learning. Why? Because learning will create an environment for you to understand what you are investing in. You need to read, you need to listen, you need to watch videos. And if you don't know where to start reading, I would highly recommend watch one of my videos. I'll put it up here. I'll put it also in the description below. Some of the books that you can start when you want to just learn about investing. You need to like reading, because I've never heard of anybody that has been successful in life that didn't like reading. And I didn't like reading when I was young, so it's okay. But the more you start reading, the more you start understanding, and the more you start liking it. So definitely reading is the number one. But also listening to podcasts. I will make a video on podcast, and you can listen to podcast anytime. I mean, when you run, when you work out, when you just traveling, these are the best things that you can use to educate yourself on investing. And then watch videos. You're watching this video right now, so you're doing a good job. So just keep doing what you're doing right now, and you will it will become subconscious to you, and you will have a subconscious competence. You'll understand what investing is all about. So just keep doing what you're doing right now. Natalie Portman said, I don't love studying, I hate studying. I like learning because learning is beautiful. And what is the difference between the two? Studying is you are forced to do something. You sit down and you do it constantly over and over, and you don't like it. Learning is by doing, and that's why if you're active in doing it, that's what learning is all about. So it's beautiful, and it opens so much doors, if you can say it like that. And Robert Kiyosaki also said that don't invest in what you don't know, because you first have to learn and then you invest. I did another video on the 4 M's of investing. The first M is meaning. Does the company have meaning to you? Because if it has meaning to you and you like it, you're gonna learn about it, and you're gonna always research about it. You're gonna always listen about that company, and that is the main thing when it comes to investing. So number one, if you don't like learning, don't even go into any investing. The second one is, if you have any debt, don't go into investing, because compound interest works negative as well. That's what I put down here, because the same way that you can gain money by investing, by compounding your money. I did a video on compounding. Make sure to watch that one as well, so you can understand it better. But if you have debt, you have to compound it on a negative effect, because you need to pay somebody that same amount that you would have gained, and it can easily make you super poor very, very quickly. So try to get out of debt. If you are in debt right now, that's okay. I mean, most people have debt. I'm talking about bad debt, like consumer debt, things that you that you can't make money on, right? Those type of debt, you need to try to get out of it as soon as possible. Try to pay it off very fast. Try to get help out there, and try to think about ideas how you can make more money to pay off your debt. And another way is you can put away an emergency fund 3 to 6 months after you pay your debt. And once you have that in place, then you can start investing, because once you get opportunity, you need to jump on it. And if you have debt, you don't have money to jump on that opportunity. So just back to compound interest. Einstein said compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. So Yeah, I made a video on that. Just go have a look at that. But compound interest can work either way. So please don't let it work negative for you by being in debt and trying to invest. Then the third reason why I would say do not invest is if you can't stand volatility, if you can't stand the ups and downs of the market. It's very normal for a stock market to go up and to go down, or for a particular stock to go up and go down. You'll see my second point here. I said efficient market theory is not true. What that means is there is a theory out there that says the price of a stock or the price of an asset that you invest in is efficient. It meaning that the risk is already priced into that company, and that is bollocks, if I can say it like that. That is not true, because in the short run, the stock market is a voting machine, and in the long run, it is a weighing machine. So because it is a auction-driven market, people have to sell for whatever reason, and the more people sell, the lower the stock goes, and the more people buy, the higher the stock goes. So it's not always to say that the risk is priced in. So and go back to the number two is if you have debt and or if you need to use the money for something, then if the stock goes down and you need to take out the money, you're taking a loss. So the more you don't have a reason for using that money, the longer you can hold on to the stock, and you can wait it through, and you can wait for the stock to go up again. So just make sure that Warren Buffett said investing, a good investor is fearful when everybody is greedy around you, when everybody is buying stock, and when everybody is fearful, you are greedy. When everybody says, the stock market will never come back, or this investment will never grow again, that's the time to buy. If you like learning, go back to number one. If you like learning because you understand why the stock price went down or why the investment went down. So the three reasons: if you don't like learning, don't go in the stock market. If you have debt, try to not invest, try to pay off your debt. And if you can't stand ups and downs of the price in the stock market, don't even go into investing. Please go ahead and put a comment down below if you've ever made an investment that paid off, or if you have maybe some debt out there and you think that it's a good way to invest with debt. And let me know if I haven't covered something that's really important. I will really appreciate that, and I'll see you in the next video. Enjoy your day, and remember, invest with passion. Cheers. Bye bye.